All right, about to go long on NASDAQ here. We are targeting a set of relative equal highs that form between 843 and 920. And this is right prior to the 950 1010 macro. So this is essentially using that first presented fair value gap at, I believe it was 931. I extended that forward and waiting to see how it reacts with that first present, how price reacts with that first presented fair value gap. We begin to close above it and in the upper half. So I look at that as an opportunity to possibly go long. That price is going to draw to the upside. And my draw is those relative equal highs. It looks too clean. I don't think that they're going to leave that intact. So I set that as my terminus. So I'm using that first presented fair value gap as an inversion fair value gap. I have my stop place at the low of that first presented fair value gap. We also have a small SIBI to the left of price. I want that to act as support for price, as well as a order block that I'm going to label in a quick second here. I really like this displacement. This looks healthy. I go ahead and take a little bit of my risk off. And at this point, I just remove the risk. We're more than halfway to our objective, so that's just a good rule that I follow. Remove the risk once you're at or above 50% between your terminus and your entry. And we're just getting started into that 950 1010 macro here. And this is me annotating that bullish order block. My only concern here is that a lot of time that mean threshold of that order block does get retraced back to, and that's roughly around where my entry is. So I just accept that I may possibly get stopped out here if we retrace, but I'm okay with it. We also have a small fair value gap above that bullish order block. I want price to remain above it. Treat it as support. Sorry for the background noise. I'm not in the office per usual, so just working with what we got. And here we have price reach into that bullish fair value gap. This is in my personal live account. I like how we traded into that fair value gap, failed to close inside of it, just leaving wicks. And price immediately move back up. That's a bullish signature for me. I also like that midnight opening price as a longer term draw on liquidity. We pretty much tanked all night long through Asia and London, so I'm sure price would want to reach up there, take out some of those buy stops. But that's not required for this. We're just looking to, we're looking at the dealing range and seeing those relative equal highs and using that as our draw. That's more than enough. This trade was, I believe, roughly 82 handles. And that's all she wrote.